So in this class today, we are looking at a question that will help us understand how to prepare an income statement for. Remember, you can order your copies. We're still taking orders. We're trying to get to know how to prepare an income statement for an aviation business, or let's say an airline company. Okay, so if we say airline, let's say airline business. Okay, all right, so your airline business, you have the operators. Who are the operators in Nigeria? Here we have the likes of Allen Noima, that's Airpeace, okay, Airpeace, aero contractors, Virgin Airs, and all that. Okay, so basically, for a background, before we go into the question that will help us prepare the income statement, let's say, okay, the airline business is into two. Okay, let's say we have the domestic operators, and then let's say we have the foreign operators. Okay, so in order to make it a little bit more specific, so we don't get confused, let's just use the word local carriers. Okay, and then let's use the word foreign carriers. Okay, so what I'm trying to say is, as an accountant, you must understand which of these categories you're in. Are you working in the domestic operators angle, or in the foreign operators angle, or we'll say local carriers angle or foreign carriers angle? Remember, as an accountant, you must as well understand some basics. Okay, what we call, let's call it the regulatory framework. Okay, I know as an industry, there are some specific ways in which things are expected to be done. Okay, so you should be familiar with those regulatory framework. Of course, being an aviation business, you should be familiar with what we call the Civil Aviation Act. Okay, and then we have what we call the International Civil Aviation Organization. Okay, that's more like a body that tries to set standard for the aviation business. And then, of course, in Nigeria, we have what we call regulatory authorities. You should be able to familiar yourself with guidelines established by the Federal Airport Authority of Nigeria. You must also be familiar with the Nigerian Airways Management Authority. Okay, and then you must as well be familiar with some publications, okay, by, let's say, the Aviation Ministry, or let's say Ministry of what? Transportation. So basically, you must get yourself familiarized with all those regulatory aspects of the industry. And then you must also understand that as an aviation business, or as an airline business, there is also what we call international agreements. Okay, so we have agreements in the areas of mobile equipment. Okay, we have agreement in the areas of what we call unlawful aircraft seizure. Okay, we have unification of international air flight rules. Okay, so we have various aspects of international agreements that you should find yourself trying to familiarize yourself with. So you must also understand, aside from the regulatory framework, you must understand that as an airline business, there's something called paid up capital, minimum paid up capital. For instance, if you're doing domestic, okay, it's around 500 million, and then if you're doing regional, it's around 1 billion, and if you're doing international, it's around 2 billion. All these are subject to change anyway. And then in the industry as well, you must also understand that there's something called permits. You take permits. So we have what we call the transport permits. Okay, so if you are into the airline transport, you must have that permit. Okay, you must be able to finalize with your necessary authorities there and make sure you get the airline permit. And then we have to call the operator's permit. You know, some airline businesses are involved in what we call chartered flights. Okay, so if you're going to do those sort of, they call it unscheduled flights. Okay, so if you're going to do that sort of business, you're going to have what we call the operator's permit. Okay, and then we have what we call the operator's certificate. So basically, the transport permit, I think it lasts for 5 years. It's subject to change anyway. And then we have the operator's permit. The operator's permit, I think 2 years. So, but you must understand, basically, that's the point I'm trying to say. As an accountant, you must understand, you know, the basic rules that guide the business or the industry in which you're reporting. So you must also understand that as an airline business, you know, Nigeria does not have, Nigeria does not have a factory where they assemble aircraft yet. Okay, so most likely you're going to be dealing with foreign creditors. Okay, and most times you have what they call leasing. Okay, of course you know what leasing here now. You know, leasing talked about, you know, relation between the lessee and the lessor. Okay, so you know it's more about moving ownership and risks between the lessee and lessor. So that means you might be doing some sort of lease accounting. So you should be able to familiarize yourself with IAS 17. So IAS 17, International Accounting Standard 17, helps us to understand the recommendations of the board regarding what lease accounting. And remember, it is possible that in this business you might be holding foreign currencies. Now there's something called foreign currency. Okay, now foreign currency is a currency other than the functional currency. So the question is, what is a functional currency? Functional currency. Now functional currency is the currency within the primary environment of business. So if you're looking at Airpeace, for instance, Airpeace is operating in Nigeria. So in Nigeria, the functional currency will be what? Will be Naira. So foreign currency will be any other currency, maybe dollars, pounds, and all that. Okay? So it means that you are likely to be doing what they call translations. Okay? Translations. Now remember, there's something called presentation currency. Presentation currency. Now, any currency used in presenting or reporting a business is what we call the presentation currency. So Airpeace, for instance, if we report Airpeace, we're going to be reporting it in Naira. So Naira will be the presentation currency. Now remember, it is possible that the presentation currency can be in either foreign currency or functional currency. Okay? Now, what I'm trying to say next is that if it is in foreign currency, you should be able to convert it or translate it to what? Functional currency. Although sometimes it is possible that the business foreign currency will be functional currency, especially where the business does not have any iota of autonomy. If a business in Nigeria, for instance, depends entirely or almost entirely on its parent company in America, so it's possible that functional currency will be the foreign currency, but it is not autonomous. Okay, but that is just by the way. But what else? So for presentation currency, if your financial statement is in foreign currency, you should be able to translate it to what? Functional currency. Okay, so if it is in dollars and functional currency is in Naira, you should be able to convert from dollars to what? Naira. You know, that sort of arrangement. That we call translation. Okay, now in translating, there's something called spot rate. Spot rate. Spot rate is the rate at which the exchange is determined on the point of transaction. So if I want to do a transaction now, okay, and there's a need for exchange, so what are we agreeing? The rate agreed at that point in time, so we call what? The spot rate. Now at the end of the year, when you're reporting, you can have a change in rate, or it is possible that you're going to have to do transaction at the end of that period. So whatever spot rate that is determined at that end of the year is what we call closing rate. Now it is possible that you have various rates. Let's say the last 4 weeks of the year, that's the last month, you have first week, second week, third week, fourth week. So let's say in the first week there is a change, let's say 380 to the dollar. Second week there's a change again, let's say 382 to the dollar. Then there's a third week, there's a change again, 390 to the what? Dollar. Then the fourth week, there's a change, let's say 400 to the what? Dollar. So you can decide to use an average. So you add the 4 up and divide by 4, Abi, to get a rate. So that rate now is called average rate. So basically, you can have spot rate, closing rate, or average rate. And remember, and this is as a result of what? Translation. So if you're translating, changing currencies, from foreign to functional, it is possible to have what we call exchange loss or exchange what? Gain. Okay, so exchange loss here will be an expense, then exchange gain will be what? An income. What it means that as a result of the translation, you lost some money, so it becomes an expense. As a result of translation, you made some money, it becomes what? An income. So you can have what you call monetary item and non-monetary item. But see, the idea is that you should understand the accounting standards guiding the industry. Of course, other standards too are what? Are relevant. You have to also be able to understand what other standards. Okay, now for your foreign currencies, of course, your foreign currencies, you have IAS 21 and 29. So if you want to familiarize yourself with what the standard is recommending in terms of foreign currency, you should read IAS 21 and IAS 29. And then for lease accounting, you do IAS 17. But that does not mean that other standards are not relevant. So you must know the standards are relevant within the industry. For instance, your IAS 36 talking about impairment of assets might be relevant, will be relevant. And then talking about intangible assets as well, IAS 38 will be relevant. Property, plant and equipment, IAS 16 will also be relevant. Provisions and contingencies, IAS 37 will also be relevant. So you must be able to understand, the accounting standards that will help you to give a fair view, or to give a proper view of the activities of the airline business, or the airline company that you are working with, or that you're reporting, so that management will have an understanding of how the business is doing. So this is just like a background, okay, of the airline business. Okay, so I'll advise you to not forget that as a business, you also have your basic double entry principles. Abi, if you sell airline tickets, you collect cash. So what do? You debit cash, credit sales ticket. Abi, that's still your double entry principle. If you pay salaries, what do? You credit your bank and debit salaries, right? If you pay for stationaries, credit bank, debit your stationaries, right? At the end of the day, what do? Extract your ledgers, balance your ledgers, prepare your trial balance, and then prepare your reports by taking into consideration various standards and various rules that are obtained in the industry. So now let's quickly take this question to help us understand how to prepare the income statement. Okay, we have the following relates to that of Hawks Air Limited for the year ended 31st March 2016. So we have flight tickets, business class flight tickets, economy flight tickets, first class. We have property, plant and equipment at cost, leasehold, aircrafts. We have inventory of snacks and drinks. Remember, if you enter whichever one, whether economy, business class or first class, they give you some entertainment and all that. So we have printing and stationaries, fines and penalties, personnel costs. Personnel costs is more like salaries and wages. So we have vendors. Okay, we have insurance. Of course, you have to take insurance in that business. And then we have investment incomes. That means the business has some other incomes. We have license and permits. Of course, you have to take permits and licenses. So we have bank accounts here. I can see bank account dollar. So this is 385 to the dollar. That's 385 million. I think that's about $1 million. So we have owner's equity 500 million. It's more like domestic. So we have bank loan there, 250 million. Bank account naira, that's 50 million. Then we have other administrative expenses. Then we have receivables. So we have the trial balance there agreeing 2,616 million. Okay, debit and credit. So that's it. So we have additional information there. Quickly, they said one, the leasehold aircraft to be amortized over 20%. So that's more like writing it off over 20%. Then two, they say 5% ticketing tax on business class is yet to be accounted for. Okay, yeah, it is possible. As a business, you pay your normal taxes, your value added tax, and all that. But then there's a tax that is charged by authorities. Okay, so usually I think 5% of the airline transport tickets, but it's subject to change as well. Okay, but the business here says 5%. So let's move on. And then we have number 3 there, inventories at the 1st December 2016, snacks and drinks, that's 1,008,900. That's about, I think that's closing stock or thereabout. Then we have depreciation to be charged at 10% using straight line method. They are saying something here. They said dollar exchange rate at the 1st December 2016 is what? 400 naira per what? Dollar. You see, I think there's going to be an exchange thing there. So we have, you're required to prepare income statement for the year ended at 1st December 2016. So let's quickly look at how to prepare this now. You know, of course, at this level, I expect you to be able to prepare the income statement, but you know, because of the industry, you know, you have to understand the terms used, and whatever cost that is what's incurred, you must know how it is behaving, then you treat accordingly. Okay, so where there's some sort of challenge, you look at the recommendation of the International Accounting World Standard. So here, let us quickly solve. So we have Hawks Air Limited. Okay, so what I'm preparing was income statement for the year ended at the 1st December 2016. Okay, so let's have our naira. So functional currency here is naira, and then presentation currency here too is naira. Okay, we're in Nigeria, so functional currency is naira. We're presenting the statement in what? In naira, so that's presentation currency as well. So let's go, and then we have our notes. Okay, so what's the first thing? We have turnover, so let's call it note what? 1, right? So note 1 there is helping us understand how we got our turnover. So let's go. We have note 1. So we have what? Turnover. Let's just say note 1 there. Okay. So we have our naira signs. So we have sales ticket there. I can see flight ticket, business class, flight ticket, economy, flight ticket, first class. So let's go. So we have flight what? Tickets. So let's call this first class, right? So what's the first class there? First class there is 800 million. So we have 800 what? Thousand. What's the next one? We have economy. You can arrange your just. So let's say economy. Economy there, what do we have? 510 million. So we have 510 million. Okay, and then we have business class there. Business what? Class. What do I have there? 440 million. 440 million. So if you're adding up, what do you have? What do you have there? If you're adding up, what do you have there? You have 800 plus 800 plus 510. 800 plus 510. Okay, plus 440. So that's 1,750,000,000. But there's an additional information from what I'm seeing here. They said what? 5% ticketing tax on business class is yet to be accounted for. So remember that I explained that there's usually a tax collected by the authority in the aviation industry. Okay, so the sales ticket, you pay 5% of it towards the aviation industry, so it's not part of your sales. So that's more like, you know, a value of part of the sales that is expected to what? Remitted, just like a value-added tax. You know, when you charge value-added tax, you're not expected to take that part of your sales. You know, you account for that as a remittance towards the inland revenue, what? Federal inland revenue service, that's for VAT. Okay, VAT, I think VAT 97.5%. Okay, but here, okay, it's a 5% tax to be accounted for. So that's more like the authority here. Okay, so I don't want us to start doing some work back, but let's just assume that the 5% is on the value straight up. So let's go there. We say business class. What's business class? Business class there is 440. 440 million. So we'll say 440 million times what? 5 over what? 100. So what do you have there? You have 4400 times 5. Okay, so that is 880,000. So we'll take that out. So less what? Tax. We have 880,000, right? This is 440 million. So we have 880. So we have 880. So if you take this out, what do you have? Okay, excuse me. We have 440 times 5. Sorry, excuse me, it's not 880. Let's not make mistakes there. Calculator is giving me wrong figure there. We have 440 times 5. So that is 22 million there. So it's 22 million, not 880. So we have 22 million. So we'll take it off. So as I was saying, we're taking 22 million off 175,000. So we have 22 million. We have 175,000. 000. Okay, minus. And so we have what do I have there? Let's just, we have 175,000 minus 22,000. So what do I have? I have 1728000. Okay, so this is your sales. So we have 1728000. Okay, so then I will say what? Cost of what? Sales, note 2. So let's call this note what? 2. So what are the things there that we're going to take? Let's look at it. You know, when aboard airplanes, they take care of you. That's like eating an expensive snack, right? So those are part of what they are selling to you. So let's take that as part of our cost of sales there. So what do we have? We have snacks, inventory of snacks. So we have opening stock here for snacks and what? Drinks. Okay. So what do you have there? 7,200,000. 7,200,000. Okay. So what do? You add up your what? Your purchases. What are the purchases there? 250 million. So let's add. So we have 7,200 plus 250, 1, 2, 3. So what do we have? 257, 200. Okay. So what do? Take out your what? Closing stock of snacks, right? So let's go to additional information. What do we have there? We have 1,890,000. So we have 1,890,000. So let's take that out. Okay, minus 1,890,000. So we have 255,310. Okay, so this is your what? Cost of sales. So we have 255,310. So let's take this out. What do we have? Okay, 1728000. So I have 1472690. So let's call this what? Gross profit. Okay, so now I'll say what? Other income. So we have note 3. What are the other incomes in the question? Okay, so here I can see investment income. So let's call that okay, note 3. So we have investment income. So what's there? Investment income there. I can see 14 million. Okay, so any other income? Any other income? No other income, but look at what they said here. Dollar exchange rate 31st 2016, 400 naira per dollar. Now remember, we are holding a dollar account here. We have bank account at 385 naira per dollar. Okay, so our bank account, we have 385 million. Okay, at what? 385 naira per what? Dollar. So if we convert this to dollar now, that will give us $1 million, right? But then I said, as at the time of reporting, dollar has increased to what? Dollar has increased to 400. So that means that if we translate, we're going to have what? $1 million times what? 400 naira. So that will give us what? 400 million. So you can see that the dollar that we have that we're holding in naira has increased from 385 million to 400 million. So there's an exchange gain. So this is what we call the closing rate. As at the end of the period now, the rate of dollar now is 400. And at the time we were recording this, the rate of dollar was 385. So now the exchange rate is now what? 400. So that means there's an exchange gain. We were holding our dollar at 385 and it's 385 million. But now it has changed to 400. So that means if we convert back, we're going to be having some income. So what's the income there? So exchange gain will be what? 400 million minus 385 million. So what do we have there? 400 minus 385. So that will be what? 15 million. So we have exchange gain. Okay. So what do we have? 15 million. Does that make any sense? So let's go. We have 400, 385, right? So what do we have? We have 0, 0, 0. 10 minus 5 is 5 now, right? I mean, 9 minus 8 is 1. 3 minus 3. Okay? So that's the exchange gain. Okay? So that means that our naira holding of our dollar will increase to 400 million, right? So what other income do we have there? No other income. So let's go. Total income now. Other income rather. We have 0, 0, 0, 9. So this is 29 million. So other income goes 29 million. So you add. So let's add there. 1472 690 plus 29. What do you have there? 1,501,690. Okay, so what do we now say? We'll call this our what? Gross income. Okay, so let's go. We have total administrative and what? Running expense. Okay, let's call this note what? 4. So we have note 4. Okay, so what are the expenses? I can see printing and stationery there, 1,250,000. Printing and stationery, 1,250,000. Any additional information? No. I can see fines and penalties, 4,500,000. Fines and penalties, 4,500,000. Any additional information there? No. I can see personnel cost. Personnel cost is like your salaries and wages. So we have personnel cost. That's more like your salaries and wages. I'm saying there is 325 million. 325 million. Okay. So what else there? I can see insurance. Insurance there is 12,500,000. 12,500,000. What's the next thing there? license and permits. So let's say license and permits. What am I saying? I'm saying 5,100,000. So what else? Other admin expense. So other administrative expense, then we have 7,600,000. Other admin expense, 7,600,000. What's the next one there? Additional information that I can see leasehold aircraft to be amortized over 20 years. So what's the leasehold aircraft here? Leasehold aircraft here is 1 billion. So what do? We say 1 billion divided by what? 20. So what do you have? Divided by 20. Okay. What there? I have 50 million. So we have what amortization of what leasehold what aircraft. So what do we have there? 50 million. Okay. So what's the next one there? What's the next one there? I can see depreciation 10% using straight line method. So what are the assets we have there aside from the leasehold there? Property, plant and equipment that cost 550. So we have depreciation, property, plant and equipment. Abi, that's 0.1 times 550,000. So what do you have? 550,000 times 0.1. Okay, times 0.1. That's what we have there, 55,000. Okay, we have 55,000, right? Yeah, that's it. That's it. 550. Yeah, that's it. So any other item there? So we've done all. We've done all. Okay, we've done all. So let's add up all our total expense. So what do we have? We have, let's start from the bottom. We have 55,000, excuse me, plus 50,000 plus 7,600 plus 15,100 plus 12,500 plus 325,000, okay, plus 4,500 plus 1,250. So we have 479.50. So total election will what? 479.50. So we take this out. Okay. So say 1,501. Okay, 690 minus 479.50. So we have 1,030,740. Okay, so this is your what? Profit for the year. Okay, so if it's loss, remember loss will be this over this, right? So it's profit for the year. So we have, well, remember, if the business happen to be a quoted company, if it's a quoted company, that means you have to show your what? Earnings per share. Of course, that is based on the recommendation of IAS 33. So it means that you must also be familiar with it, because your mind can also decide to want to see it, whether they are quoted or not. But what is recommended based on the standard is that if the business is a quoted company, you should be able to what? Give the view of what the business is, what earnings per share, basic and what undiluted. Okay, but in this case, okay, we are only looking at it from what the perspective of what of a limited company. Okay, so what we've done here is to prepare the income statement of what of a business in the aviation industry. okay, or an airline company, or air transport company, or Airbus company. So depending on how you look at it, okay. And then I was able to also give some basic backgrounds, okay, referring us to some regulatory frameworks, basic requirements, international agreements, and then some relevant international accounting standards. Very listing IS 17, foreign currencies IS 2129. Then I also reminded you that you should be able to get for yourself out with other relevant standards. Okay, I mentioned impairment of asset IS 36. I mentioned property and equipment IS 16. I mentioned provisions and contingencies IS 37. I also mentioned intangible assets, okay, IS 38. And I also said that so long as you're in that industry where the business is publicly quoted, you're able to state your earnings per share based on the version of IS 33. Okay, so this is just a view of the income statement. With this, we can also prepare the statement of financial position. We can prepare cash flow statement. Okay, we can prepare some other analysis based on what we want to tell management. We can even decide to prepare the statement based on categories: airline business for first class, airline business for economy, airline business for business class. So this generally modified statements to help the management understand what the business is doing or how the business is performing, so they can make informed decision. So if you have questions, you can reach me on the numbers displayed or drop them in the comment section. I'll be there to reply with the right answer. Don't forget, you can support us by donating to the account displayed, because I believe that we've given out some knowledge here which is ordinarily paid for, but we're doing it for free. And because we want to keep this going, we're calling for kind-hearted people to donate to this nice cause, so that we can continue. We also intend to do as many industries as possible, bring in as many content as possible, and this is what we intend to do for a very long period of time. So to be part of this, you can give your donations, or you can call it gifts, okay, pay into the account displayed, or call me via the numbers displayed to let me know how you want to be of help to us, how we would need your help, okay. And then you can sponsor the textbook, like I said, so I can distribute to students for free. Remember, classes on Jados Consulting is free, and the topics there are highly relevant for students and accountants. Thank you.